The Federal Reserve website PDF, entitled Conducting Monetary Policy, in Figure 3.3 on page 35, gives the following example of how the Federal Reserve conducts open market operations. When the Federal Open Market Committee, FOMC, sets monetary policy that, for example, requires adding liquidity to the banking system to spur economic activity, it instructs the Federal Reserve Bank of New York's open market desk to purchase U.S. Treasury securities in the open market. Number 1, decides to reduce the target for the federal funds rate. Number 2, instructs the Federal Reserve Bank of New York desk to purchase securities. Number 3, purchases securities in the highly liquid market for U.S. Treasury securities from one of the designated approved primary dealers. Number 4, ensure that the market for the U.S. Treasury securities is liquid. In other words, they are always willing to sell securities and always willing to buy securities. Number 5, credits account that the primary dealer's bank holds at the Federal Reserve Bank of New York in exchange for securities. Number 6, the securities acquired are assets, and the bank accounts credited with the payment are liability items on the Federal Reserve's balance sheet. Number 7, with the added funds in their accounts at the Federal Reserve Bank of New York, banks can make more loans to businesses and individuals. Number 8, with increased opportunity to borrow, businesses and individuals are able to purchase mortgages, cars, and other items, boosting spending in the economy. Now, in this example, where did the Federal Reserve get the money to pay the primary dealer for the securities? The money came from nowhere. It created the money out of thin air that was placed in the system as a credit to the primary dealer's account at the Federal Reserve Bank of New York. According to the example in Conducting Monetary Policy in Figure 3.3 on page 35, the Federal Reserve has no money to pay the primary dealer in order to purchase the securities. In essence, the process of adding liquidity to the banking system begins with the Federal Reserve making a securities purchase with no money to begin with, as it creates money out of thin air that is placed in the system as a credit to the primary dealer's account at the Federal Reserve Bank of New York. Remember, money has to come from somewhere in order to be placed into any account as a credit. This is true for everyone except the Federal Reserve System and its purchasing of securities to add liquidity to the banking system. Remember, the Federal Reserve creates money out of thin air and places it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank of New York. And the process is listed in plain sight on the Federal Reserve website, as I have just shown you. The Federal Reserve does not touch tax money. The Federal Reserve creates money out of thin air to add liquidity to the banking system. In the following audio clip from the television show 60 Minutes, posted to YouTube by CBS, listen to the words of former Federal Reserve Chairman Ben Bernanke, who was chairman of the Federal Reserve from 2006 to 2014, as Ben Bernanke confirms these facts concerning adding liquidity to the banking system. Now listen carefully to the words of Bernanke as money creation out of thin air is confirmed.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed.
Now, as I have proven unequivocally, the Federal Reserve, through typing whatever amount it is in need of through some keystrokes, creates the money it needs to purchase the securities in order to add liquidity to the banking system. The money was created out of thin air, as the Federal Reserve has no money to begin with. Think about this. An entity, that has no money whatsoever types some keystrokes to create the amount of money it needs. When you have no money to make a purchase, can you power up your computer and type some keystrokes to create the amount of money you need? Of course you can't, but the Federal Reserve can when it purchases securities in order to add liquidity to the banking system. Now remember, the Federal Reserve purchases securities by typing some keystrokes to create the amount of money it needs. These keystrokes create the money out of thin air as a credit to the primary securities dealer's account at the Federal Reserve Bank. Ben Bernanke also confirms these facts in a 2012 college lecture posted on YouTube by the Federal Reserve. Now listen carefully to this audio clip, as these words of Bernanke also confirm how the Federal Reserve creates money out of thin air as a credit to the primary securities dealer's account at the Federal Reserve Bank. Also, remember the question I addressed earlier. Where does the Federal Reserve get money to begin the process of adding liquidity to the banking system by buying securities in open market operations? Through monetizing debt, as debt, credit, liabilities, assets, and balance sheets are what enable the Federal Reserve to create money. Remember, the Federal Reserve creates money out of thin air and places it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank, and this is also addressed by Ben Bernanke in the following audio clip.
Now, you might ask the question, well, the Fed's going out and buying $2 trillion of securities. How do we pay for that? And the answer is that we paid for those securities by crediting the bank accounts of the people who sold them to us. And those accounts at the banks showed up as reserves that the banks would hold with the Fed. So the Fed is a bank for the banks. Banks can hold deposit accounts with the Fed, essentially, and those are called reserve accounts. And so as the purchases of securities occurred, the way we paid for them was basically by increasing the amount of reserves that banks had in their accounts with the Fed. So you can see this here. This is the liability side of the Fed's balance sheet. Of course, assets and liabilities, including capital, have to be equal. So the liability side had also to rise near $3 trillion, as you can see.
Now, during this college lecture, Ben Bernanke stated that the Federal Reserve owned about $800 billion of securities at the beginning of the financial crisis before they purchased $2 trillion of new securities. Now, where did the Federal Reserve get the money to purchase the $2 trillion of new securities? The Federal Reserve created money out of thin air and placed it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank. The $2 trillion was created out of thin air. Now, how did the Federal Reserve get the $800 billion of securities that were on the balance sheet before they created money out of thin air to purchase the $2 trillion in new securities? The $800 billion in securities that were on the balance sheet were acquired the same way they acquired the $2 trillion in new securities. They were acquired by creating money out of thin air for the purchase, regardless of when they were purchased. The Federal Reserve purchases securities by creating money out of thin air and placing it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank. This is nothing new. The Federal Reserve has been doing this for many years, but most people don't know this truth. Now remember, according to the Federal Reserve website and the Federal Reserve audio clips, the Federal Reserve purchases securities through creating money out of thin air and placing it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank. This is exactly how the Federal Reserve creates money, out of thin air. Now, Since the Federal Reserve can create money out of thin air and place it in the system as a credit to the primary securities dealer's account at the Federal Reserve Bank, then the Federal Reserve can create money out of thin air and place it in the system as a $2,000 monthly credit for every United States citizen 18 years of age or older. This Federal Reserve, money from nowhere out of thin air to spur economic growth system can fund $2,000 in monthly government-guaranteed universal basic income, which will stimulate the economy and go a long way towards ending poverty in the United States and eliminate any need for taxpayer dollars to fund this program. In the example on the Federal Reserve website, the Federal Reserve credits the primary securities dealer's account at the Federal Reserve Bank of New York in exchange for the securities. The securities purchased by the Federal Reserve with money created out of thin air are assets, and the bank accounts that receive the funds credited from the securities purchased with money created out of thin air are listed as liability items on the Federal Reserve's balance sheet. With added funds in their accounts at the Federal Reserve Bank of New York, the banks can make more loans to businesses and individuals. Increased borrowing by businesses and individuals results in a boost in spending in the economy. Notice that it's talking about businesses and individuals going into debt through taking out loans, which boosts spending in the economy, but leaves businesses and individuals in debt, which is how the banks earn money, through the interest the banks charge those who take out loans with them. This is a banking system built by capitalists for capitalists, and this is a banking system that is built on monetizing debt, which is a topic for another lecture. And the money to make all of this possible came from nowhere, or in other words, the money to make all of this possible was created out of thin air. How the Federal Reserve creates money is listed in plain sight on the Federal Reserve website for everyone to see, although many people are unaware of these facts. So let's go over this one more time before we move on. Now remember, the Federal Reserve creates money as a credit into an account that the primary securities dealer's bank holds at the Federal Reserve Bank of New York. The money placed into the primary securities dealer's account as a credit comes from nowhere, or in other words, out of thin air. Remember, money has to come from somewhere in order to be placed into any account as a credit. This is true for everyone except the Federal Reserve System and its purchasing of securities to add liquidity to the banking system. Because of the fact that the Federal Reserve creates money out of thin air to spur economic growth, this makes the Federal Reserve the perfect vehicle to fund $2,000 in monthly government-guaranteed universal basic income for all United States citizens at least 18 years of age.